Denver's apartment market is in arguably the best shape it's been since the tech boom of 2000-2001. Occupancy is an 11-year high, rents are surging, and developers are taking notice. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Denver update. The story here starts with the local economy. Some very impressive numbers of late. The Denver-Boulder area ranked among the nation's best with the addition of 40,000 jobs in the past year. That is the most it's gained in any period since early 2001, and it amounted to a growth rate of 2.9%. And this metro area is now recovered on the jobs front in terms of all the jobs lost during the recession have come back, and the growth has been widespread across a number of different employment sectors. And with job growth at the best pace since 2001, apartment occupancy is at its best rate since, you guessed it, 2001. 96.3%, and since 2001, occupancy in Denver has averaged 93.4 and peaked at 95.7, so we are now well above those norms. Occupancy jumped 90 basis points in the quarter thanks to a big surge in demand, while new supply levels remain pretty modest for now. And we'll touch on that later, but first let's take a look at rent change. Big jump in Q3. Denver led the nation with a 3.2% quarter-over-quarter rent hike, well ahead of next place finishers Columbus, Oakland, Hartford, San Jose, San Antonio, and Charlotte. Year-over-year, rents in Denver are up 6%, 8th best in the country. And what's interesting here is that rent growth levels had been appearing to be trending downward, but with that big quarter-over-quarter hike in Q3, Denver is back to the 6% mark. And what makes the Denver numbers especially impressive is that apartment fundamentals, occupancy, and rent growth rates are strong pretty much across the board among product age groups and submarkets. But what's interesting now is that instead of the urban core leading the way on rent growth, which had been the case for quite a while, it's now the suburbs. And that's particularly interesting given that the suburbs are where you'd expect to see home sales start to be a limiting factor on rent growth to some degree. So let's highlight a select few here. Littleton, 8.8% rent hike year over year, and right around the 7 to 8% mark in Highlands Ranch, Thornton North Glen, Broomfield, the Tech Center, and Westminster. And given the near universal strength in the apartment market, you'd expect that apartment developers are taking notice, and you'd be right. We're really at the early stages of that. Construction as of the end of Q3 is at 4,343 units, but this is a market where it takes a lot of time to get planned projects through to actually breaking ground through all that approval process, and there's a lot more that's going to be coming pretty soon based on looking at permit levels. Take a look at this chart showing multifamily units permitted on an annual basis, 6,598 units permitted in the past year. That's the largest number seen here since 2003. So we're already above the peak level seen in that past development cycle. So that means that supply is going to be a significant factor in 2014, but probably not a significant factor in the next 4 quarters in terms of the number of units completing. So we're expecting another big year in the Denver apartment market, looking for occupancy to increase 30 basis points to 96.6, and for rents to climb 5.7% year over year. And by the way, for lots more on Denver, as well as all of the markets in the mountain region, the desert, and in Texas, join us at our Texas Southwest Conference on November 7th in Dallas. You get a lot more details at mpfresearch.com. So that wraps up for today. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.